Hello, this is Vance, and this is Thursday, March 15th, 2018. These are the CL trades for today using the slow hand method for price action. Okay, I've got the Thursday 800 tick chart up here. This is, of course, the April contract. But what I did was I took the TPO right here, time price opportunity. So it's really a market profile. It's done by a company. I've got this loaded up there. So you can see top TPO and volume profile chart. And what I did was I overlaid the various letters to the side. This is split. And each letter represents the first, second, half hour, 30 minutes of trading. So E is 9 to 9:30 Eastern Standard Time. F is 9:30 to 10. G is 10 to 10:30. H, etc. So what I did was I went and showed it on this side chart here. And this is the 800 tick chart. And I'm showing the blocks of roughly a half hour where E corresponds to on this chart. And you can see the F is a bigger, wider margin, this half hour, etc. What I wanted to show was that how to compare the 800 tick chart to the TPO. And on top of that, if you look at the volume profile, this volume profile right here, you can see that it's got this bulge in here, like this. It's like, and you can see that from the, not from the first of the day, but you can see most of the volume is in this price, is rotating around this area right here. Well, if you look at this chart, and if you squeeze it together, you can see that the magnitude is from here down to here, which is G, right? So F and G, and this happened, F is at 9:30, G is 10, and then H is at 10:30, and so forth. So you can see that, and then you can see pricing kind of squeezing down. So most of the volume is around this area. The idea being in volume profile, market profile, is that you try to take trades here long if you see this painting. In other words, you see this profile develop, and as the profile is developing, you see that there are more individual traders are interested around this price, more where it's in balance. So at these extremes, if we have pricing up here or pricing down here, you can see, and this is after the fact, so this is going dynamically, it's painting during the day. We can see that on this chart, if prices get down to this area, or prices get to this area, we have to look at where is it going to migrate down to the middle. And so that's why when you look at a trading range from a bound area, if it comes down and visits this area, then it might kind of rotate over to the other side. And that's really kind of the idea of market profile. Now, this is on the full day, on the regular trading hours. You can also take it in smaller bites. Well, let's say from noon till, or from 9 till noon, that 3-hour period of time. It might be smaller, and it might be just this small area. So you might take into consideration if there's an idea that news is going to be coming out, or you believe around lunchtime, more traders are on lunch, and when they come back at 1 o'clock, let's say Eastern Standard Time, that there's going to be a rush of trades that'll take place, or Central Time in New York, for instance, where individuals will be back at their desks. Anything. That might be a consideration. But I wanted to show this, and the reason I wanted to show this is that I don't use this. I don't use the TPO for trading. I'm aware of it. I know the concepts of it. So I don't really need, all I need is the one chart. I'm just saying that you can look at, having this in the back of your mind, and there's a lot of traders that use, well, I shouldn't say that I don't use it. I have it in mind. I have an idea of how it works. Otherwise, I wouldn't be able to put it up here and kind of compare the two of them, obviously. But I don't use it on a daily basis. I don't use this to look at taking the trades on the 800 tick chart. I just wanted to show that there are parallels. Now, you could use this. You could use the TPO, take trades there. Like if prices migrates down here, you might take a long. And you can actually trade on this thing because it is overlapped with a NinjaTrader. You can use a chart trader on this. So you could use that. And there are some traders that I know of that use it. But it's just something to kind of keep in mind. So I just wanted to touch base and show this and give you an idea of and I've talked about this in the past, but I just wanted to kind of show how this translates into the 800 tick. Okay, let's get on with the other stuff for today. All right, first thing this morning, this is the open. As you can see, the overnight, the low was at the overnight low was at 60.82. Overnight high was 61.64, and prices traded between those. So it didn't reach, well, not overnight high. The daily high was 61.54. That happened right around 10 a.m. this morning. The low we never got to. That happened late last 5:30, 5 o'clock in the morning. Anyway, if you look at this line right here, this is where prices opened, 9 o'clock. And I was really looking at this area as a fairly tight trading range. We had this trading up here, and I'll just mark it. So if you had this line up to here like this, I saw this as a move. 9 o'clock opens, price comes down a little bit. Here's a failed second entry long here, but it really wasn't a good bar. I mean, we're just kind of tapping on this bottom, and it was a relatively, not a real strong move, but it was a move down. You can see that it hesitated. We had this overlap. Prices kind of tried to punch up again, pull back down. I thought this was a reasonably good trade to take right here, and there's a reason for that. It's a second entry long. I was looking at this area here as being the trading range originally this morning. Where the most touches took place, right in this area. And I felt that if you got in here for a long, I didn't think prices were going to continue to go down. And because we had these pullbacks in here, so it was kind of relatively almost like a turnaround, and that there was enough room to get in a point at the top. So this was, now, I didn't know that this was going to happen, like this is going to blast out of there so with such strength. I mean, even here, this is, you could have taken a trade here, and it wouldn't necessarily be a bad trade. I don't know about limiting in any lower than that. It was kind of challenging, but anyway, this was one trade. When price got to the top, though, it broke through. Second entry short right here. That's what that was. And if you look at it, I thought about this as a short and thought of taking it, but after this strong move up, there always was a hesitation. I was looking for maybe a signal for it to go higher, but when prices turned over like this, and we had this bar, by the time it completed on this bar here, this bar completed, we're kind of out. It was really close to what this top was after this strong move, and I wasn't 100% sure. And then in this area, we had prices kind of stacked up. You can see this hesitation. So at this point in time, by the time this just stacks up, and if I had my low area, the most touches being in this area, there wasn't enough room to get out. Now, there was enough room to get to this low, but I didn't think we were going that far. I really didn't. So your first opportunity, second entry long, you get ever aggressive in here, that would have worked, and you would have been able to ride this down to this area. But I didn't. I mean, I was looking at this area, and I didn't think we'd get all the way down here, so I was reluctant to doing that. By the time it completed, like on a strong move, it was a little bit beyond that, but this took place in a real short period of time. Now, when price got down to this area, now I'm looking at this other area. Now it's kind of really bouncing along this low. It didn't really reach it. This is a strong move, and you think that there was no follow through. You see, this is a second entry long right here on this bar, but man, that's really deep down. And I mean, it's not a bad setup, but at the same time, it's a fairly aggressive trade. Price moves up, pulls back again. Here's another second entry long here. Price moves up, another second entry long here. And so this was a little bit better, I would think, because you broke this channel, came back, that didn't make a new low. But you can see this overlap, this area here. Price is indecision. It can't go down, but it can't go up. So one of two things are going to happen. It's either going to break to the high or break to the low. I didn't think it was going to go lower. But I don't know. I mean, at that point in time, and if you look at it from the standpoint of where the most touches, I mean, I still had this area, which was formerly support, now maybe resistance. But as you can see, for most of the rest of the day, the rotation was about 30 ticks, either side of this. So once we had the moves in the morning, up, lower, it just kind of rotated like at 30 ticks for the rest of the day. Now, when it happens like this, if you can recognize it, you can go long at these bottoms and short at these tops, and you'd be in pretty decent shape. You can see that. I think you can see that. So if we really, let me just see if I can see if I mark this a little bit heavier. So if you look at this and say, okay, this is the top of the range, is revisited up here, top, this is the bottom, it's revisited twice. This is now the range. If we establish this as a range, what you want to do is you probably want to go long here and short at these tops. And if you did that with enough, limit in, you'd have enough room to kind of play this off, like rotate, like your 15 ticks in either direction. 15 ticks in this way, 15 ticks in the other direction. So, as I said, this is really just a pretty tight range. This is about 30 ticks, this turning over from the top to the bottom. If you look through these two boxes, 30 ticks right along here. And so you really want to, if you're taking trades in the middle, that can be problematic because, right in here, you don't have any real room because it's only 15 ticks either way. So you want to take a look at making trades down near this area or going short near this area. And if you look at the TPO like I talked about this morning, or just, pardon me, just a few minutes ago, not this morning. If you look at that, you can see that. Let's see if I can get this. Let me clear that off. If you could see the chart here, you can see that it's that area right in here. You can see later on in the day, these later letters, J, K, L, M, N, O. So if we're looking at, this is 2:30, 2 o'clock, 1:30, 1 o'clock, 12:30, 12 o'clock. So from 12 o'clock, which is J on, you can see it's a pretty tight range. And it was really in this area. No, I'll just leave the green. In these two areas. This is roughly where it is, the 30 tick rotation. This corresponds to this chart. So you go long in this area, you go long here, and you go short here. And you can see that by the time the end of the day, the action was in this direction, right? So your stop is up here, your other stop is down here. So somewhere in that, something like that. Anyway, that's pretty much it. If you have any questions, please let me know. This is Vance. Bye for now.